So, if you want to learn how to generate income, to pay for a bill, to generate money, to travel, whatever the reason is, this is the video that you want to watch. For some reason, we have not been using this strategy like others have, and now it's time. It really is time. We all know about everything, the price is going up. I'm sure if you are planning a Thanksgiving dinner, you are truly being affected. But there's ways that we can subsidize or circumvent having to take on the brunt of these high costs. And that is by using the stock market and not in a crazy way, not in a way where you think you're going to outsmart it, you think you're going to beat it, in a way that you can literally understand it at a base level and then take advantage of all the things that it has to offer. And so today, earlier, we talked about NVIDIA. We're going to talk more about that Saturday during our webinar. But for those who pay attention, and while you really timing the market is not easy, but if you pay attention and you understand strategy, you would understand that the market did what it was supposed to do with NVIDIA and all of the announcements. One of the reasons why I came on earlier today was to kind of give a purview of the moves into the moves, the big moves that NVIDIA was making. And, maybe some people took advantage, maybe they didn't. I know it was at 12 o'clock today, so not a whole lot of time, but the market can be predictable at times. And this is one of those times. So, first, let me go ahead and introduce myself. Hey, everyone, what's up? I am Kim, AKA Kim with the Gems. On this channel, we talk all things money, travel, and wellness. And if any of that interests you, especially from a cultural perspective, from a Black woman's point of view who has seen some things, been some places, then go ahead, hit the subscribe button. You will become part of the Gem Nation family. We are almost at 16,000. I still want us to get to 50,000 by the end of the year. So if you are not subscribed, go ahead, subscribe now, and let's get us as close to the 50,000 subscriber number as possible. I also want you, if you're watching this after it's live, go ahead, speed it up, speed it up. We're not going to be here long, but it's important. The information is important. Replay it on 1.5 to 2.0 speed, and if you're really about that life, go ahead to 2.5 just to make sure you get through the information. And so, yeah, tonight's topic, I should say, is all about three stock market strategies that most of us never learned, but we should have, because it can truly help during good times and bad times. And so we're going to talk about those three. One of them is my absolute favorite, and I'm going to share that second. That's going to be the second strategy that I share. But yeah, so let's go ahead and get into it. The first thing I do want to do is to share um, my playlist for anyone who's interested. I'm not new to this, true to this. I've been focused and hyper focused on the market for going on, over 5 years, let's say 6 years. I've been an investor in the market since I was early 20s, but I worked at a brokerage firm when I was 17. And so all of that combined has really piqued my interest into how to make the most of this opportunity, which is available to all of us. And I want you to do the same. And this is a playlist that I have on this same channel, and it's called Stock Market Investing for Beginners. And it has it has probably 10 videos that you can view and start the process. So if you're new, if you're a beginner, there's no need for you not to understand this. You will find a video that starts letting you understand the top 10 financial, oh, my earring, top 10 financial terms every beginner stock investor must know. Sometimes it can seem like, earring just lost it. Sometimes it can seem like you're speaking a different language when you're talking about stocks, but it's really not that complicated once you put in the time, the effort, et cetera, et cetera. And so that's one video. But if you look on the right side of the screen, well, my right, you'll see there's a video about introduction to the stock market. It's a free course replay. I've been doing these courses, like I said, for over 5 years. A child announced at the end of 2020, launched it the very beginning, Black History Month of 2021. And so, introduction to the stock market, cryptocurrency and NFTs for beginners, crypto terms, 10 beginner words that everyone should know before investing
Hey
in
everybody,
um,
welcome.
crypto or NFTs, uh, researching companies on the stock market, how to adequately strategically research companies to see if they are companies that should be part of your target list to invest. Learn how much you could have made if you invested in certain companies. And this was over 2 years ago. So that number, I'm sure, has spiked even more. And I'm sure NVIDIA is on that list now, because that has been a winner chicken dinner for people who took advantage. How to buy stocks for beginners, how to pick the best stocks, how to buy stocks for beginners. Again, there's probably two parts: most frequent questions from beginner investors. And yeah, so you can go to the channel, to the playlist, rewatch that if there's anything that I go over tonight that you simply do not understand. And so, let me stop sharing that. And so, yeah, so we're going to tonight talk about the top 3 strategies. And let me just make sure I do not forget anything. Give me 1 second. Okay. So, again, there are so many ways to make or generate income using the stock market. The stock market is just not for buy and holders. The stock market is just not for 401ks, Roth IRAs, regular, the stock market has many ways that you can optimize, strategize, and benefit. And since we as a community and culture are often late to the conversation, we tend to take advantage of just the low hanging fruit, right? So the long term investing, the buy and hold strategy. Or the other way is that we get sold on the hype of trading in ways that will take your money before they will give you money. And there's a whole middle area, right? A middle range that you can pay attention to. And how I tend to use it when you know what? That's the second. That's the second strategy. But if you're ready to learn how to make the stock market work for you, this is a video not only that I want you to watch, I want you to rewatch and take notes. I want you to take action. And I want you to share it with somebody that you care about, right? Um, So even one of the questions I have, oh, I don't have a whole lot of money. Well, 9 times out of 10, you have more money than you think. A lot of times it's just sitting in dormant accounts. Sometimes it's sitting, in accounts that are generating a fraction, if any, return on that investment. Sometimes, and why I also give advice on see if you got any missing money out there, you, family members, et cetera, et cetera. I just did a whole video, what, a week ago, 2 weeks ago, on multiple ways to find missing money and or settlement money. There are ways to find money to take advantage of these opportunities that I am going to go over. But there's also a high probability that you have money to invest. So whether you're new to investing or a OG, if you're looking to grow your wealth or just pay some bills, these are practical strategies where you can earn consistent returns if you do it right. Um, and build some semblance, depending on how active you are, of financial freedom, but you can definitely start to take control of your money, your income, and your debt if you have any. So let's go ahead and go over the first of three. Like I said, I'm going to use number two, and number two will be the version that I use most often, and I'll share why I use it. But one, some of you may have heard about, some of you may know about, is called dividend investing. And it's a great way to generate passive income. Let me know in the chat if any of you have heard of dividend investing. If you've heard of it, put a one in the chat. If you've never heard of it, put a five in the chat. And I don't even know who's in here because I can't see that screen, but let me check. Oh, hey, Moni. Hey, Show About Nothing. So I see there's other people in here, but if you've never heard of it, put a five in the chat and I'll spend more time explaining it. If not, I'm just going to top line. Oh, Quita Hall. Hi, Quita. Has not heard of it. So Moni hasn't either. So dividend investing simply means that you pick companies that pay regular cash dividends, either monthly, quarterly, or yearly. And basically, it's free money that the company gives you for being a shareholder. A shareholder simply means you own shares or a share of that stock. So rather the price of that stock goes up or down, every time they pay dividends, you get you receive payment. So more and more companies, unfortunately, are shying away from that. There used to be way more companies that did that than there are today, but there still are companies like, I believe, Apple, Coca-Cola, they all offer dividends to their shareholders. Now, the dividends are not like, we're not talking $50 a share, but the more shares you own, the more that greater that number can be. A lot of the companies that you'll find that still pay dividends are like utility companies, banks, and the top, what we call consumer staples. So like I mentioned, I think Coca-Cola, Procter and Gamble, and then there's also real estate investment trust, also known as REITs, that also pay dividends. So think about it. If you, and I don't know, can't recall offhand the amount of dividends that Coca-Cola pays, but let's just say it's 50 cents a share. Some are 50 cents, some may be 10 cents. The goal would be for you to own enough shares so every quarter your return just on dividend payouts, which are going to happen rather the stock is up or down, so you're not trading these, you're stacking these stocks. So let's just see, I'm going to find out, just so I make it completely A B C D E F G, like what company pays the highest dividends? It popped up. So um they're also called yields too. So I usually just say dividends, but basically the yields is the percentage. It's a percentage of the stock price, the amount per share that you pay. So there's a company, that pays nearly 32 companies, ECC, which is Eagle Point Credit Company. We talked about banks, right? And OFC Credit Company both pay, well, Eagle Point pays nearly 30%, and OFC pays over 30%. But the high yield dividends, we're not gonna look at those because I don't know those, and sometimes there's paying that much can be a red flag. So I'm just gonna go over the top dividend stocks that have a high rating in the finance world. So Coca-Cola, Pepsi-Cola, Merck, MERK, which is pharmaceutical, ConocoPhillips, which we know is like gas, right? Um, Mondelez, which is consumer staples. So like who's under Mondelez? Crab is not it's food category and personal, snacks and stuff like that. Kimberly Clark, Colgate Palmolive. Those would be the top 8 dividend paying stocks. Now, let's just see how much they pay. So their yields are closer to 3%, anywhere between 2.89 percent for Coca-Cola to 4.85 for Kimberly Clark. And so and those are consistent. So if you have, I don't want to do math right now. Y'all know how to do math, but let's just say, I hate doing 4.85. So basically, the more shares you have, approximately $1,000 investment in a company that pays 4.85% yield in dividends, you're getting $48.05. But the goal is, imagine that your investments are 10 times that, right? Every quarter, you're going to be, you're talking about, close to $1,000, excuse me, $2,000 just a year in that one company for investments. And the more companies that you invest in that pay dividends, the higher that number can be. So if you are not invested currently in dividend stocks, this may seem like a tall order, but in no time, if you think about it, because Coca-Cola, no, let's see how much Kimberly Clark is. Kimberly Clark stock today is $102 per share. And that fluctuates. In the past year, it's ranged, it's even gone up. So that means, oh, wow. Okay. So yeah, I'm sorry. I start to get sidetracked. So the goal is, every time you have extra income, stash that in a company where they pay a high yield dividend, but it's a company that's secure. We're not doing these 30% dividend yield companies. Red flag. That's a red flag to me. And so the goal is to grow your portfolio with these companies. But let's go ahead and um, talk more about the reasons why people do this strategy. It's because it's stable and you can predict the income with pretty much low to no risk, right? The company may fold, but that's why we stick with sound companies. And again, it's just guaranteed income. And who doesn't like guaranteed income, passive income for doing nothing except owning the stock? You don't have to sell shares. You don't have to, and you can collect the dividends. A lot of people reinvest the dividends if they don't need it. But when you're ready to collect, you can collect upon payout. You can have it set that those returns or the yields are not reinvested into your portfolio. So again, every year, a lot of companies will raise their dividends as incentive, especially if they're doing good or growing as a company. And it's just a smart way to mix up your portfolio. Like, your entire portfolio doesn't have to be dividend incomes, even though I know many people that have set up their portfolios so they literally live off of the dividend income that they receive. That's their job, basically. They wait for their quarterly dividend payouts. They take the money, and that's how they pay all their bills. That's how they travel. So again, just a great passive way to um, have reliable income that is generated from the stock market. Again, the stock can go up or down. You are still getting that dividend payout regardless. Let me see if y'all have any questions, because next I'm going to go to my favorite way to generate. Oh, okay, some more people got in the building. Hey, Quince, I'm so glad you came back. Good to see you. Hey, Casper, good to see you. KB knew about the dividend payouts. That's good. Excellent. Next is my favorite, my absolute favorite way to generate income. It's not as passive as the dividend strategy, but once you understand the moves, you understand the companies, it is not risky, right? Not as risky as day traders or options traders. And that would be swing trading. It's not passive income, it's considered active income, but we stack the odds in our favor by only focusing on companies or ETFs, exchange traded funds, that are solid. And we do not, even though I also do options trading, but this is by far my favorite. And like I said, it takes the stress and the risk. Everything's risky. And let me make that disclaimer. Trading and investing, anything, including your 401k, comes with risk. And I just want to make that clear. But we try to minimize risk by focusing on ways to um, use the stock market that stacks the odds in our favor. And so what does that mean? What does swing trading mean? Swing trading is also synonymous with short-term trading. And I mentioned earlier, anything less than a year is considered short-term trading, aka swing trading. And that's the definition by the government, the IRS. That means you will have to pay capital gains taxes if you hold these positions for less than 365 days. Long-term trading, according to the government, is more than 300, a year or longer, 365 days plus, right? And you don't have to pay capital gains taxes if you trade after you hold the position for a year. Swing trading is real simple. You simply buy the stock or ETF and sell them within days or weeks or even months to profit from the price swing. The price going up, it swings up, right? Well, that's what we are hoping. And these trades that I'm talking about, I do not take a trade if it doesn't present at least a 65%, 65 to 70% or higher odd, right? And so the goal is to know when to get in, definitely know when to get out, know how to set a stop loss. So if something happens and the trade goes against you, you are not risking the entire amount, even though with equities, it's less risky than options, but some people still like to have a 20%, 30% max stop loss, so that if you are trading based on a 70% odd, you know that 7 out of 10 trades that you take will go in your favor, right? If it's a 60% odd, 6 out of 10 trades that you take will go in your favor. 4 may not go in your favor, but you have that stop loss ready so that you're not losing a whole lot. And the great thing about why it works is because there's always going to be volatility in the market. We've seen it. Anyone who pays attention, oh, the market tanked today. Oh, the market's at its all times high. Like, there's going to be short term volatility. Like, one day it could be at its all time high, the next day it could tank. And those are the times that we know to look for opportunities to take advantage of. And for anyone who's here now, I talked about it earlier. There are high probability trading strategies that people use to basically live off of. There are people that use these high probability trading strategies, 60 or 70% um, win rate or higher, and that's how they live off of them. I mean, that's how they make their generate income. Swing trading, if done right, is one of those high probability trading opportunities. If I know I'm taking a trip and I have to pay $4,000 for said trip, I am going to find a way for the market to pay me so I don't have to come out of my pocket for that $4,000 trip. And it could be something, if you want your mortgage paid for a month or 2 months or whatever, you set a strategy, and the strategy is also based on how much you put into the market so that you can generate that amount to cover your mortgage, to cover your groceries, to cover your light bill, to cover your child's, you know, second semester tuition, whatever the strategy is. Everybody has their own why, and that's where we start. What is your why? And you have to have a why to keep you motivated, to keep you on track so that you in fact do generate um, the type of returns that you want through swing trading. And I'm going to just give a quick example verbally, but it's simple. You buy when the stock is on a dip, right? So let's use Nvidia, and maybe I'll pull up that screen. I'm not going to share the strategies I use now, but I'm going to show you how someone Nvidia I don't really like to use for swing trading. I'll find a company. But you buy it when it's on a dip. So when the market tanks, when you hear, oh, the market's bleeding, oh, there's blood in the streets, oh, the market's red, that's where the opportunities usually lie using this strategy. You buy when it's on a dip, and then you sell when it turns, when it returns to the level that it's adequately valued at. Because when the market tanks or stock dips, we like to call that it's on sale, right? As long as the valuation of that company has not changed, then the stock is on sale. And it may have dipped for so many reasons. I can't go through all of them tonight, but there's many reasons why the stock could have dipped. Geopolitical news is just one of them. But that company is still quite valuable, and you just need to know that. And you can repeat this every week, every month, every quarter, whatever timeline works for you. And it works rather the market's going up or down or sideways, which we call consolidation. Again, it depends upon the strategy you use to generate the amount that you need, right? And then those are the companies that we use to trade based on that. So you want to take advantage of the short-term volatility. It doesn't require constant watching like day trading. It really doesn't. Like, you set your alerts when it starts to approach the level that you know based on the research. Once it starts to approach that level, you get ready to deploy your capital, pick up some shares. Once it gets there, you pick up the shares, and then you let it come back to the level, the valued level that you know it's coming back on because it was on sale. You wait for it to come back to that level, and then you sell the shares. And let me just see if I could pull up. I'm gonna pull up the chart, a chart to kind of show you something. But it's great for people who are looking for active income, but with more flexibility and reliability than day trading. So If you're here now, let me see. So, yeah, so I am going to do 2 things right now. Let you know that basically can I pull this up? Let me see if I can share. Yep. So, for those of you who were here earlier, you heard this already. Some of you have already signed up. I did get some notifications that there have been quite a few signups, so I appreciate the signups. On this Saturday, I will be hosting a free webinar to go over high probability trading strategies only. I will be hosting a masterclass that begins, it's going to be a 60-day, 8-week masterclass that starts next month. And we're going to learn how to generate income in the stock market in those 60 days. We're going to learn how to master low risk, high probability trading in 60 days by understanding the setups, the most high probable setups that create consistent income with less stress. Ain't nobody got time to be stressing, right? Nobody has time to be stressing. So there is a link in the chat pinned. There should be a link in the description, and you can go ahead. I also have created a bit.ly, so you can go to bit.ly slash, I'm going to tell you right now. You can go to bit.ly slash we're going to child. Okay, bit.ly. Where are my bit.lys? Trade the odds. So it's bit.ly slash trade, TRADE, THEODDS. But again, it's already pinned in the chat as well as in the description. What are you going to learn about during these 60 days? Well, one thing you're going to do after you learn, you're going to take action. We're going to be in this together. After learning how to do the setups, oh, we're taking action. So, if your goal is to create reliable income from the stock market in as little as 60 days, this program gives you the exact foundation you need instead of chasing hype. Please, let's not chase the hype. These meme coins will get you got. These crypto coin, I mean, these meme stocks will get you got. The coins craze will get you got. Let's be strategic. And I know so many people who got trust and believe because they didn't know what they were doing and they didn't know how to focus on high probability trades. But you'll get the foundation that you need in order to figure that out. So you'll learn how to focus on a set of elite a small set of elite high probability setups. And we don't trade you know how many tickers there are on the on the exchanges? No, we focus on core ones that we know have a valuation that this company is not going to fold today or tomorrow or next year. So you'll learn how to focus on a small set of elite high probability setups that serious traders rely on for consistent results. You're going to learn how to build consistent income streams with high probability setups. You're going to cut out the noise and confusion with a simple, disciplined approach that even total beginners can master. And you're going to learn how to trade with confidence. You're not going to be sweating, oh, what's going to happen next, because you have created a thesis that you are going to stick by because you believe in this company, right? And so at the worst case scenario, you may have planned for this stock to rise in 2 weeks and it may take 4 weeks, right? But the company is not going anywhere, right? So instead of your 2-week net return, you'll have it in 4 weeks. So again, whereas with options trading, there's a whole host of other factors that are involved. There's a whole options chart, and everything in that options chart can mean that you may sit there with options and see the stock going up, but your profitability going down and not understand why. Well, there's a whole host of Greeks that you have to understand, the gamma, the theta, all of that stuff that most people don't take the time to understand. Whereas with trading equities, you absolutely have to just know the company, and that's it. Charts are part of it, but it's not the crazy type of charting. I'm going to show you what charting kind of looks like. And if you have a question, please put a Q in front of it and I will be sure to get to it. Jackie, I saw your question come through. You don't have to retype it. I'm going to get to that in a bit. Let me just go through the third way to generate income that we're not going to focus on here in this course, but it's a great way to generate income, especially for people who either buy 100 shares of a company or own 100 shares or more of a company. And it's called covered calls. I'm going to get to the charts in a second, but I just want y'all to let me stop sharing. Am I still sharing? Yeah, let me stop sharing this. And let me go ahead, and I do want to share this. So if you are on your phone, or if you have a phone nearby, you can also access the sign up for the free webinar this Saturday by using this QR code. Okay, now I'm going to leave that up for a second while I get to the covered calls. So I don't know if anyone here has ever heard of covered calls. If you haven't trade options, you probably haven't. This is an options trading strategy that is more reliable and stable than most of the other strategies as it relates to options. So how does it work? You sell call options on stocks that you already own. The buyer pays you an upfront premium, which is income, and you get that rather the stock goes up or down. Why does it work? Because it generates regular cash flow. And the more sets of 100, so when you trade options, you need to understand that one options contract equals 100 shares of the option. It's called an option, right? The option to buy 100 shares of a particular stock equity company. So if you own 100 shares, you can basically write options contracts. You could sell options contract against your shares. You get to keep the premiums. And sometimes those options contracts may be exercised, which means someone has paid for your 100 shares because it met a certain benchmark. But, and again, I don't want to get too much into the stock options conversation because that's not what we're teaching during this course, not not the 60 days. But for those of you who are interested in learning more, you can do your own homework about covered call options and how to write them and to generate income. So you generate regular cash flow. It works best when a market is consolidating, so moving sideways, so to speak. It's not spiking up and running down. And you can significantly boost returns on long-term positions. So positions that are not weeklies. Oh gosh, see, I feel like I'm talking to people who already understand options. But the longer your position is, you can boost your income. You have to own 100 shares of stock. And on average, you can collect, and these are just for regular valuable companies, you can collect anywhere between $50 for lower price stocks to $300 or more for more valuable stocks just for writing those contracts and having 100 shares of that company to sell. right? So if you want higher income than dividends alone, then this may be the strategy for you. So the first strategy we talked about was dividend investing, which is passive income. The second strategy was swing trading, which is my favorite and what we're going to discuss in the masterclass. Now, let me take the um, and the third was selling covered calls. And anyone who has 100 shares of a company or willing to buy, because you can also do this for lower price companies. So company may be $20 a share. You have an extra $2,000 sitting around, this may be a way for you to generate some monthly income that can help offset any cost that you have. If y'all know electric is going to go up, right? Electric bills are going up. Why should you have to pay for that? I mean, ultimately you're going to have to pay for it, but why not have the stock market pay you to pay for it? So, you buy I already mentioned with the swing trading, you buy when the stock is on a dip and you sell when it rises, basically. And then finally was the covered call options income. And so there's other ways. I'll just give you I don't want to confuse you with that. So basically, this is strategies that any beginner can start with. Um, Strategies do get more advanced. And as you learn and grow and take what you learned, especially during the charting in this course, the charting strategies that you learn in this course, you can then grow, but you have to focus. And I highly recommend you focusing on high probability trades before you go into anything else. Listen, I was on a call, not a call, a video, was watching a video with this young lady who is trying to sell her course, which is another reason why I had to pray on it. I had to carve out time to make sure we get this in sooner than later because there is some bad information out there. Don't you ever, ever, ever do margin calls. Don't you ever, ever, ever think that it's okay because her sales pitch was you don't have to use your own money. You can use the bank's money. Don't do that. Don't do that. Don't do that. Please don't do that. And then I've heard some other people just with some gimmicks and some things that really are going to affect our community, especially the ones that don't know and not in a good way. And so, again, focusing on high probability trading is the optimal way to do it. And again, y'all can check my receipts. Check my receipts. Oh, let me just show you another receipt. This was supposed to be saved for, oh, I hope I can share it. This is supposed to be saved for the people who actually sign up for the course. So I'm not going to share it, but I will tell you that I started my short-term trading paid courses in 2021, summer of 2021. And can I show this? Yeah, no. This is for the people that sign up. But I'll show y'all. I'll show y'all on Saturday during the free webinar. Um, this is something that I know works. This is something that I have not only studied, but y'all know me, I hyper focus. I'm a hyper focused kind of girl. And so when there are strategies that give you a 70% odd to win, to make money, then oh yeah, I'm going to stick with those all the time. And just so you know, the strategies that we're going to use during the course, let me see if I could pull that up real quick and then I'll pull up some charts. Um, oh, where is that? Let me close this out. Oh, it's up here. Let me see if the percentages are there. Yeah. So if we look at my favorite strategies that we're going to learn, um, let me see. Control F. Yeah. Okay. So there are, it's called, I like to call it my core trading method, but it's three setup mastery system. And I'm not going to call them out, but one gives you a 65 to 75% win rate when you follow certain rules. Another one gives you a 70% win rate. And the other one, that's 65 to 70% win rate. That's, and it's within the top 5 strategies of high probability strategies across all trading strategies. I hope that made sense. So, yes, it's in the top 5 of all high probability trading strategies. And these are some of the strategies that we're going to learn. So, I do want to pull up a chart just to show you something. Let me see the questions first, if there's any questions. Hey, Jackie. Your why is to pay off your mortgage. You're so close to paying it off. This could help you reach the goal by the end of 2026. Exactly. Exactly. Having a why keeps you focused and on target. So you don't give up. So you don't basically, throw up your hands and say, "Oh, I can't do this," or "I'm just going to take the money and do something else." No. So yes, you need to know your why. And your other question is, do we have to choose a certain tier in school to get this particular workshop? You'll have all that information on Saturday, Jackie. A lot of people on here don't even know what school is. So I'm not confusing people. I'm focusing on this right now. So on Saturday during the workshop, you will get all of that information. Again, anybody who wants to sign up for the workshop, you can go ahead. Sorry. And use this QR code, or you can use the link that's pinned in this chat. It's free. We're going to be in it. This is not going to be a long workshop, 45 minutes max. And that's if y'all have questions. But I'm going to take you through the strategies that we're going to go over, why they work, and more. And so again, if anybody's interested, you could go ahead and use that QR code. So let me pull up. I wasn't planning on doing this, but let's do this. And hopefully, so. And maybe, just maybe, I can find a company. Okay, there we go. Okay, so y'all should be able to see the screen. Oh, and I was supposed to be putting this banner. I'm going to have that banner go across for anyone who wants to write down the bit.ly. It's Trade the Odds. And it's taking place this Saturday at 9 a.m. Okay, so let me go to this chart and just show y'all a little something. Okay, this is AMD. AMD is from, oh, shoot. So AMD is riding the NVIDIA wave. It closed today at 223. No, this is a one. Let me go to day chart. Okay, so the low today was 219.71. Overnight, after market close is at 232.73. So we're talking a $20 difference like in one day. But that's not even what I want to look at right now. I was just looking because I was researching earlier. Let's do Coca-Cola. I think it's KO. Yeah. So Coca-Cola is also a dividend paying company. And the benefit of trading companies that pay dividends We went over it, right? We I don't know if y'all can see, but let me see what y'all see. Let me take this off. Okay. Um, so I'm just gonna point to an area that so this was a beautiful setup right here. Such a beautiful setup. Not only would you have got earnings payout or dividends payout. When is this? Oh, you probably would have got dividends payout. Took place March 14th of this year, 50 cents per share. That's beautiful if you have a stack of shares. But the beautiful thing, one of my favorite ways to trade, and this is what we're going to, I'll just call it gap trading, right? But there's certain gaps, right? There are certain gaps that have the higher probability of being successful, the higher probability win rate. So a gap is what it says, right? Exactly what it says. And Coca-Cola is known for having consistent results to gap trading. But when you see, and I'm not going to, there's certain names for this type of gap right here. There were two ways. If you would have set your alerts and waited, you could have rode this about $10, between $8 to $10 per share. Twice, not just once, twice. It did something when it hit this gap right here, and this is a certain type of gap, which you'll learn during the course, that has high probability win ratio. And I see it in other spots on this. Okay. On this chart. Yeah, I see it again. I see it so far. I've seen it 3 times, and I've did just a quick look. So there's certain gaps that have higher probability of um, generating income. What was the other? There was Kimberly Clark. Let's see, and Kimberly Clark Corporation. Uh-uh, Let's see. Let's see what their gaps look like. Yep. Okay. So not only would you be able to benefit from swing trading this company, it's a company that also delivers their so here's another gap right here. And if you would have, now that wasn't, mm, yeah, you could have walked away with if we would have wrote it, but that's risky. But yeah, so that's another like 10 to 20% return. There's other companies. I don't trade Kimberly Clark. I'm just looking now at it, but this is what we're going to do. We're going to look at the companies that pay dividends, and then we're going to look at companies that are just valuable companies that everyone should have on their watch list and have alerts set up for, because there's other types of gaps that often, let me see. Well, I don't want to do Kimberly Clark. Let's go Apple. And some of y'all are probably like, what the heck is she doing? What the heck is she talking about? Child, Apple done ran today too. Let's see. Sorry, I did the wrong thing. AA. Yeah. Okay. Oh, 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 that was beautiful. So I'm just gonna say all of this right here is a gap. It's really not, but it kinda is. This play on a 1-hour chart. Okay, so these are the types of things we're going to learn, but there's other strategies. We're gonna do the highest probability strategies, and gaps is just one of them. But again, there's multiple gaps that all gaps aren't created equal is what I'm trying to say. So you want to only focus on the highest probability. And so and when I tell you there's certain companies where it works like a charm, you can even look at SPY, which is and QQQ, which follow the Nasdaq and the S&P. Mhm, mhm. Mhm, mhm, mhm. Yeah, so again, and this is the 1-hour chart. That's not the day chart, which we usually start with, but I'm just looking at some things right now. I just want y'all to pay attention to the fact that these charts tell a story, and for those of you who are interested in learning stories, then those are the ones that are going to be successful. And it's really a game. I won't even call it a game. It's really strategies that we should all know, but unfortunately, we don't. And so let me just see if there's any other questions. I don't see any other questions. And I really, without you understanding the charts, I don't, we will go over more about the charts during the webinar on Saturday. Again, we're going to be in and out max 45 minutes, and that includes questions. But I do want to go over exactly what the course is going to look like. I want you to understand there is a price for the course. It is 60 days, right? We're talking about 60 days of um, learning basically how to make money. And there's going to be a curriculum. We're going to go over that, and we'll go over how we will come together to do charting. Like we will chart together. Like we will have setups. We'll be able to each go around and talk about the setups that we see, and entry points, how to set alerts. We will only use free resources. You're not going to have to pay for the charting um, mechanisms that you use. We're going to use simulators. So we're going to use fake money, but we're going to learn basically the dividend strategy, the my favorite, which is the swing trading strategy with certain setups. My favorite setup is gap. And then there's certain gap trades that fall under gap trading that tend to produce better results. And then more about areas which are standardly called supply and demand zones. And so, anywho, I think that's it. I don't see any more questions. Yes, thank you, Christine. Please, if you are here, like, subscribe, share, and don't forget to register for the upcoming free webinar. And I'm doing this for this program because anyone who signs up, I really want you to understand what you're signing up for. I don't want anyone to sign up thinking this is a get rich quick. This is high probability, low risk trading. And anyone who knows anything about trading, low risk doesn't bring out massive rewards, right? So options trading, which is much higher risk, you can see bigger rewards. You can see much bigger rewards, but you can also see much bigger losses. And so again, I don't want us to experience loss. I want us to do what we can to help facilitate having an additional stream of income that is consistent and reliable. So without any further ado, I will be coming back probably live. Tomorrow's Thursday. I will be coming back live tomorrow because I really want to talk about NVIDIA again. Let me just tell y'all what I wrote about NVIDIA. I pulled this up, but we're going to talk about NVIDIA tomorrow. You see, they beat earnings. It's already start making some moves. Hopefully, I mean, it should hold out through tomorrow. But let me just share. So on April 13th, I started doing options trading early, options courses early early 2021. So April 13th, 2021, this is my post from, you know what? Let me see if I could screenshot this and then pull it up so y'all see I'm not capping. Now I won't be able to pull up the whole thing because it was a very long post, but I want y'all to see this because, sometimes you just gotta image. Let's do desktop. Here we go. Let me pull this up. Somebody had reminded me about this post that I did on April 13th, 2021. And it says, for those of you who trade options or interested in trading options, if you took the LEAP options class already, then this should make sense. I had already taught a LEAP option. So LEAP is longer term. So you have short-term options, you have swing options trade, and then you have LEAP. LEAP is usually more than a year. And so this is what I wrote about NVIDIA, y'all. This is what I wrote about NVIDIA. NVIDIA, thank you, NVIDIA, is what I will say. But what I said in the post, and then I had screenshots to support what I wrote. Let me start from the beginning. This is for those who trade options or interested in trading options. This was my original course, my original community. If you took the LEAPS options class already, then this should make sense. If you signed up for this month, I will share this strategy. So I was doing consistent courses. Anyway, knowing when the premium is on sale is by far one of the best strategies to use if you want to protect your investments. Do not trade options all willy-nilly. One of the reasons why I have to do this course first before we get into options is because too many of us are trading willy-nilly, period. I hear it all the time. So it says, check out the images below. The company is NVIDIA. One image is for a LEAP contract, which is greater than a year until expiration. The other is for a swing short-term contract, less than a year until expiration. So a $4,700 investment on March 8th would have been worth $11,000 on April 13th, with lots of time before the contract expires. Now, if your goal was to double your money, you take your money and you run. You do not wait for it to continue to go up. You had your why, you needed 5K, you got your 5K, you go, right? But some of us, we just want hope. It's called hopium. You're going to sit there and hope and pray that this thing continues to go up and it could turn around on you like that. Anyway, a $640 investment on March 25th would have been worth $6,788 on April 13th, less than a month later on a swing trade. If you buy on the pullback, you are mitigating risks and maximizing your potential for profits. Don't chase the stocks. All hot stocks cool off. If y'all see my videos from 2021 that's still on this page, I said it a million times. All hot stocks will cool off. They will get tired, they will need a rest, and they will come to you. Anyway, if you buy on the pullback, you're mitigating risk and maximizing your potential for profits. Just like stocks, all hot premiums cool off. Oh, I said it here too. Stay woke. That was our strategy. Wealth is obtained through knowledge, education, and execution. And please do not make another options trade until you know and understand your entry point. I've been begging for people to not make risky moves, like, because just like Vegas, the house always wins, right? If you don't know what you're doing or know when to walk away. Um, this is a public service announcement, and there are a few not on Facebook that have taken the class or signed up. I will also share this post via email. Okay, yeah. So again, it was just screenshots showing how options, even though you can get a much greater return with options trading than you can with equity and shares, the risk is much greater as well, right? And we're not right now in a place to just be wasting or giving the market our money. And so, anyway, that's pretty much the um let me remove this. Yeah, so that's pretty much tonight's conversation. Tomorrow we are going to talk about NVIDIA and what it did. So it'll be tomorrow evening. I will post later the time. But I did want to just go over the three stock market income strategies that most of us never learned. But it's a way that we can make extra money. And again, without all of the stress and anxiety that the options trading market can bring. And so, oh, thank you, Christine. I appreciate that. I don't know why, but thank you. um, oh, hey, Siobhan, good to see you. Oh, you're so welcome. You are so very welcome. I'm so glad you were able to make it live. And so, yeah, so thank you, everyone. Again, don't forget, Saturday, 9 a.m. will be the webinar. I'm trying to find a way to do another one on Saturday. Oh, and the class is going to be limited. That's the other thing. I don't do, and you'll see through some of my other posts that I'll share during the webinar, all my classes, in order to give optimal input and be able to respond to everyone, there will be a cutoff. I'm just trying to figure out what that cutoff will be. But I'll share with you guys on Saturday what the cutoff will be. I was going to be real stingy at one time. But we'll see. We'll see what, and when I say stingy, meaning, I was looking at single digits. Usually I look at double digits, but we'll see. We'll see what the interest is like, and then I'll take it from there. Okay, so I'll see everyone tomorrow evening who can join. Let's just call it 8 o'clock. It may be 9, but for now, oh no, it can't be 9 because the Flawless meetup is at 9 o'clock tomorrow, everyone. I will see the Flawless members at 9 p.m. 8 p.m. we'll come here to talk about NVIDIA and what it means for us and what we should take away, what we really need to take away from what just happened. And that includes the move they made last night after market, which bananas. Anyway. All right, guys, thank you. And I will see you tomorrow. Don't forget to hit the like button, subscribe, all that good stuff. Share with a friend. Subscribing makes you a member of the Gem Nation family. Let's go ahead and keep this train going. Let's go ahead and learn all of the things they don't want us to learn. And they want us to focus on this soap opera, this reality show called The Files. And we're not going to do that. We're going to make some money, y'all. Anyway, I'll see everyone tomorrow night. Bye.